make a living. Crypto is on the rise, making that dough in the crypto paradise. Watching it go, buying low, selling high. Riding the wave, I'm here to stay, living in the digital age. No banks, no fees, just decentralized. It's crypto paradise. Ooh. No banks, no fees.
Alrighty, let's kick this thing off, surfers. Happy Tuesday. It is November 25th. We got the entire surf crew in the house. A lot of great stories to cover for you guys today. PPI numbers, the inflation data has come in under expectations. Does this mean the rate cuts are a foregone conclusion, or are we going to be surprised and see more downside on December 10th? Ukraine war looks like it may be ending soon. Let's hope that happens. Let's hope that happens, not only for the sake of the millions of people involved in that war, but for the sake of the markets. Will the end of this war signal the start of another bull run, or the start of the bull run again, I should say? A lot of great stories to cover for you guys. Monad launched yesterday. We got some airdrop news coming on that. But why don't we start with this? PPI data just dropped. We've been telling you guys it's more likely than not, they end up cutting the rates on December 10th. And I think the PPI data gives them more pretext and more cover to do that. Hopefully you can pull up that story real quick. But we are looking at I think it was expectations were like 2.7% increase in those numbers, but it came in at 2.6. We're looking at the core anyway. So what's your takeaway on the PPI numbers?
Well, I mean, it's good to see that inflation is up less than they assumed it would be. That gives us another edge for an interest rate cut. It's also good for the people. Now, remember, it isn't that shocking to see inflation go up from the 2.5 to the 2.7 range in this period of time, because in seasonality, there's usually inflation around the holidays, as everybody is spending more than they have to buy gifts, to buy food, to get family members over, to get their house spruced up, whatever it be. So seasonality-wise, the inflation always kicks up a little bit around the holidays, but it is good that it's below expectations. As remember, last week we've been saying this for a long time, but we think that the interest rate cut is coming. Polymarket disagreed with us, and I think Nate will get to it. Now Polymarket overwhelmingly agrees with us. And once again, everybody here at Crypto Paradise was early to the trend. And if you bet on Polymarket, well, your odds just went in your favor. Congratulations.
You are
muted, Nate.
You are muted, Nate.
You're muted, Nate.
Oh, I guess he cannot hear us, perhaps. But
I'm just been muted. Sorry.
Oh, there you go. Back in action. What were you saying there, bud?
I was just saying, yeah, there's some fun bets right now. So, yeah, last week, was it Thursday or Friday, this was no change. Was at like 57%, a little better than a coin flip for no change. Dramatic turn of events, I think, over the weekend or into last week. Trump made some more comments about Jay Powell and that he's going to be replacing him. We also had Chris Wallen, who's kind of the front runner right now for the replacement, come out with some very bullish statements around the rate cut in December. And since we see this massive flip here to 86% now in favor of the 25% decrease. If you come in here, I've actually never made any bets on here, but it's fun to play around with. If you bet $100, it's like changed a little bit. If you bet $100 here, you're roughly 120-ish. And if you come in if you hedge it and throw $20 on the 50 basis point cut, so as long as you don't think we're not going to get a rate cut, this bet would essentially break you even if we get the 25 basis point cut, or make you about $1,500 if we get that the glorious 50-point unexpected basis point cut. So if the memes aren't paying off, there's a new form of degen gambling you can do on Polymarket here.
There you go. Well, we're not getting the 50 basis point, ladies and gentlemen, but the 25 feels like a foregone conclusion at this point. The PPI data solidifies even further in my mind. The interesting thing about the PPI data, there's two sets of it. There's the set that includes the volatile food and energy costs, right? Those fluctuate heavily based on, Nick mentioned seasonality, just global markets, trading oil 24/7, right? So the Fed actually doesn't really look at that at that reading, or at least not nearly as closely. They don't weigh it as heavily. They weigh the core PPI that excludes the energy and the food, and those those sort of volatile data points. They exclude them out. That's what they look at, and those numbers came in below expectations. So that's what you want to see, and that's why, to me, you're seeing the poly market rates increase for a rate cut. We've been on that story for a long time. And you add to the fact that there's been some more data dropped, I think private payrolls, ADP, things like that, payroll providers, that the labor market's continuing to show signs of weakness with more job losses mounting and piling up. So inflation has been more or less vanquished, or at least where we, relative to where we were a year or so ago, and the labor market's looking very, very shaky, and therefore you're looking at a 25 basis point cut. So hopefully you guys got on that. Maybe you took a bet, maybe you didn't. I don't think there's 50 basis points coming, although Stephen Mirren's probably gunning for that. But either way, good for the markets, and I don't think priced in. Let's see. Do you guys think it's priced in?
Well, I mean, this goes back to the tweet we did here on November 20th, where if you can see here what the poly market odds were, no change was 66% only 5 days ago, and we're sitting here pounding the table. We disagree with that. We disagree with that. And then on 22 hours ago, a day ago, no change was down to 25%. And I think now Nate just showed that the no change was even lower than that. So,
13.
I mean, things continue to trend in our direction, and I think poly market has it right here. They were just late to the curve on what we were seeing from the markets and what our expectations were from PPI, from statements from Powell, and from statements from Trump.
If you go back 8-9 months ago when we were talking like, what are the catalysts we need to really see this bull market kick off? There was a couple big ones we talked about. We talked about for macro stability around the world, we need the war between Ukraine and Russia to end, right? We said that was going to be a big catalyst. We said rate cuts were going to be a massive catalyst. And we said printing was going to be a massive catalyst. We said the ETFs were going to be a massive catalyst, right? So we've got the ETFs. Rate cuts have started and looks like they're about to continue and should ramp up next year. QE's coming. And now, another factor with the war ending. Now, our timing was a little off. It's a little dragging out a little longer than we expected. But in terms of the catalyst, that could, turn this around and give us the finally give us some euphoric and some parabolic runs in Bitcoin and alts. It's all lining up with exactly what we've been talking about for the last 8-9 months now.
Yeah, and I mean, if you want to get to this, Crypto Amaru, there is news out that Ukraine has agreed to a peace deal that was written up by the United States. Again, we got to wait and see if Russia approves it. And what can slow that down is it looks like the EU just doesn't know how to stop fucking themselves, and they're trying to put their grimy hands on this and make it, something that Russia really doesn't want. So maybe you guys have more details on it, but we are getting close to maybe a resolution between Russia and Ukraine, which was one of our biggest catalysts for a turnaround event. Obviously, we thought this war would end earlier because, again, Trump was there making peace deals and couldn't get both sides to ever agree. Got Russia to agree once, then got Ukraine to agree, but then Russia didn't agree anymore, and now we're bringing them back to the table once again.
Yeah, let's pray for this to happen. Everyone should be praying for peace, as always. I think, it's interesting, like, thinking about these catalysts, just taking a step back, right? What I've come to realize after, we've been doing Crypto Paradise daily live streams for, 6 months now, really, I'm paying more attention to the markets than I ever have before. And what you sort of come to realize is that catalysts can occur, but that doesn't necessarily mean that price immediately follows in the way that you think it would. But I still believe that as these catalysts pile up and more of them come to fruition, it's like a pressure valve. It's like this pressure's building. These positive catalysts keep piling up. It's kind of percolating in the markets, maybe, beneath the surface a little bit. Then you get some FUD out of left field. Maybe you get JP Morgan trying to, kill MicroStrategy or whatever. You get a black swan event like 1010, and it delays things from an actual price performance standpoint. But that doesn't mean the catalysts themselves went away or are meaningless in terms of price performance. I just think pressure's building, and you're eventually going to have that the pressure valve break, and you're going to see a massive move to the upside. And I think, yeah, the Ukraine war ending, let's pray that it happens. Put that in that category of like likely catalyst, maybe not immediately causing, a bull run, but definitely adding a list of super positive things that have happened over the past, year since Trump's been president.
Yeah, it's just really fundamentals leading price, which is something that hasn't happened in crypto in a very long time. And historically, in the rare times that happens, price does catch up in a big way and shoots higher than many people expect due to that, slingshot effect of that action.
Yeah.
Yeah.
It's going to be interesting to see because you could get, say Russia does agree to this, peace proposal. Okay, yay, peace, right? My guess is you might see a little bit of bounce on that day, but then revert to the mean shortly thereafter. But what you could ultimately see is long-term positive effect on the markets vis-a-vis oil prices continuing to go down, right? The fact that this war has been raging on, Russia's basically been embargoed. It's had a negative impact on oil prices. If you see them, the sanctions go away, and Russia's able to enter the world economy again, get their oil out into the markets again in a black market manner, that should decrease the price of oil, which then continues to help push inflation down, keeps costs down for regular Americans, gives Fed further cover to cut rates more. So, it all kind of works together. So I wouldn't be surprised if immediately you see a little bounce on price, then kind of markets forget about it. But long term, I think this is nothing but positive in terms of overall markets.
Do you have anything else to add on that, Nate?
I was going to say, as far as the markets are concerned, I think having the possibility of an escalating, world war starting in Europe is good stabilizer for the markets.
True. Yeah. No threat of nuclear war hanging over people's head. That should make people a little bit more comfortable to enter quote risk assets. That's a great point. Yeah. No, it's nothing but positive. I just don't know if say Russia signs this deal tomorrow, whether we just bounce 10% across all assets. I'm a little skeptical. Maybe 4 or 5%, right? I just don't know if that in and of itself spurs the start of a bullish move up. But who knows? We ran from 80 to 90K on basically no news because Bitcoin was oversold over the past couple days, and just expectations of rate cuts sort of buoyed the markets a bit. But I guess it doesn't take too much to pump Bitcoin when it's been dumped below 100K for the last couple weeks.
Yeah, I was just looking at Russia's main exports. You were right on oil, which could bring down energy costs, but they're also a big exporter of natural gas to EU. Could bring down energy costs and coal as well. And then they also do have iron and steel. And I know that we've been cracking down in America on taking foreign steel because China's is lower quality, but it does say that Russia's quality is up to the standards of the United States, so maybe that will decrease some building costs when it comes to iron and steel here in America and globally as well. Because remember, like you said, there's embargoes. They're not allowed to trade. The only people they're really able to trade with right now is China and India. They've been kind of closed off from the EU and all Western civilization.
Yeah, it's going to be good. It's going to be good to get this war done with. Let's hope Russia agrees. I don't know the terms. I'm not some geopolitical expert to know whether it's going to happen for sure or what timeline, but I think this is very positive. Let's hope it feels closer than the other times that this happened. Because as I understand, these terms that America had proposed were actually pretty pro-Russia. The 47 points, they were kind of skewed in favor of Russia, according to what I've read. And so the fact that Ukraine's agreed, hopefully then Russia can agree and, to get this thing resolved.
The only thing that would stop Russia from agreeing, in my opinion, is Nate was hearing rumors that the EU wants to add in that Ukraine could be added to NATO. That's been a hard line for Russia, and I don't think that they would agree to that if, in fact, that makes its way into the agreements.
Sorry, I think that's the opposite. I think Trump's proposal included that Ukraine gets added to NATO, and the counter proposal from Europe said no, we don't agree to that unilaterally. So I don't know.
That's something that I don't think Russia would accept. I guess maybe they would because they're getting all the land, but that's always been a hard line in the sand for them.
No, I don't think they agree to that, and perhaps it's just a negotiating tactic. You put in a bunch of stuff, your wish list, and they're going to say no to these 5 things, but they'll say no to the other 10, yes to the other 10 things. Who knows, right? Let's let them work it out. But it does feel closer than it's been in the past. I don't know. Maybe I'm just like looking at it from rose-colored glasses, but I don't know. Based on what you guys are seeing, doesn't it feel a little bit more real this time compared to some of the other stuff? Like remember that stunt that Trump had met Putin over in Alaska, just did like some weird thing, and then or like the time that Trump was yelling at Zelensky in the White House, like those weren't going anywhere. This feels a little bit more legit.
Yeah, let's hope so.
Let's look at let's look at a couple charts here.
Yeah.
Bitcoin rallying off the lows quite a bit. Yesterday, we were down here at the dip when we were live around 85,000. We continue to rally to the upper end of the zone to 88.7, 89,000. We're back down to 86.5 once again. Again, we did say we thought that the major low was in, and we want to see us get this nice grind higher rather than just V-shaped God candles. We did start to get a God candle yesterday once some news dropped, some Trump information dropped about him tweeting that they had great negotiations with the president of China on soybeans and other farming products. That's what gave us that green candle. Giving up some of the gains today, but again, as long as we just keep grinding higher and people aren't looking, and then we get, QT ends December 1st, interest rate cut December 10th, war's over, and before you know it, all the fear is getting sucked out of the market, and we can go higher. This is what we like to see. Obviously, we sold it here publicly at 118,750. We said there was a bullish divergence here. We rallied off of that to 16,000, but now we have started redeploying capital. Around 93,000, we put 33% in. And at 82.3, we put another 33% in. So we still have some cash to buy Bitcoin here, but we're still leaning on the side of we go higher for longer. And this was a major low on Bitcoin on a big capitulation wick, oversold on the RSI, oversold on the Technometer, and a big inflection point in the markets. Now, we'll see if there's another black swan event or what could get us down even lower. But everything really looked like that was a major low on Bitcoin. And we have started to see a little bit of Ethereum outperformance yesterday as well, as we saw Ethereum ran from 2,600 to as high as 2,985. And if you tuned into yesterday's live show here or the Link Crypto show, we kept saying you really want to get above 3,000 to 3,100, close up there, and you'll feel a little more comfortable that that was a major low and we can continue higher. Well, we fell just short of that. So we're not out of the woods yet, but it is nice and constructive that we've seen some gains here. And I still think there's a lot of macros and a lot of fundamentals that are leading price here that we've already talked about in this show as well.
Yeah, just thinking about Bitcoin price, like I know there's some fear mongers out there suggesting, we're going to break to the downside and, we're going to end up at 75,000 or whatever the case may be, much lower. I don't know. I mean, I'm skeptical of that happening. To me, that would take maybe some more, negative news stories around the MSTR and the JP Morgan short, things of that nature. The MSCI story that came out last Friday. It would take a bit of a headline news, I think, for the price to dump, 10, 15% from here, and then we would know that the 4-year halving people are right, and I'm just not willing to accept that. So I think we end up grinding higher. There's a lot of positive things coming up here. PPI data was good. Looks like the Fed rate cut's gonna be happening. We know QT is ending. A lot of positive catalysts. Let's hope no more black swans.
Well, we still have, this is from CoinGlass as of just about 5 hours ago, 0 bull market peak indicators have triggered so far. That's a pretty good win rate, I'd say. But outside of that, one other indicator that I like to look at is the degens are always wrong indicator. The degen consensus is generally wrong. Never, ever has all of the gurus and Twitter personalities and degens agreed simultaneously that the market's over and been right. Like whenever the market is over, it's peak FOMO. Like no one thinks the market's over when it's starting to get over. Either all of a sudden all the degens and Twitter personalities became geniuses and they all called it perfectly at the exact same time, or they're wrong. So I don't know. Maybe we break the trend on this one and somehow all of the degens and CT personalities around the world all knew at the same time 2 weeks ago that the bull market is officially over and they all nailed the peak top. But I find that very hard to believe.
Yeah, I mean, we've talked about this in the past. This will be one of the first times in history that the average Joe has faded an asset class, while institutions and the quants and the big businesses and BlackRock all are going full board, releasing products, putting in hundreds of millions of their own capital, company capital, creating DATs, all of these things. And then those guys are wrong, but the average Joe that said, nah, Bitcoin's a scam, no, it's too expensive, they're right on the market cycle. I just don't see that as a reality. Retail never came in. You never had a euphoria feeling in the market. You never had a parabolic run. And you have institutions, nation states, governments embracing Bitcoin and crypto in a huge way. Ethereum ETF is about to start paying dividends. You have Thomas Lee still buying. You got Michael Saylor still buying. You got all these pundits, these big guys, tons of money, tons of backing, all the influence, all the insider trading, still saying higher for longer. But then you got PFP guy on Twitter saying, oh, 4-year cycle, that's it. No, retail was smart this time around. They didn't buy because they knew that the cycle was going to be shorter and a dud for all altcoins. I just don't see that as a reality either.
Well, also, if you look at where we are in the liquidity cycle, business cycle, rate cutting cycle, if this price action were to be happening while rates were at 2% and Fed had been, pushing money in the economy vis-a-vis quantitative easing for many months, then I'd say, okay, yeah, we might be, the run might be over here because what's going to cause it to go higher. But that's not the case. The case is we've actually been at the end of a rate tightening cycle here for the past 2 years, right? I know we've had a couple cuts the past few months, but for the most part, rates have been high. We know there's been further quantitative tightening for the past 2 years. And now finally, on the eve of the Fed switching from tightening to easing, you're going to tell me that the market's over. Like it just belies all logic if you look at it that from that standpoint. And so, yeah, I mean, our money's with the Wall Street guys and with the likes of Raoul Powell and Thomas Lee and Michael Saylor and let's see. We didn't listen to PFP guy this time. We'll see if we get it right.
Talking about Pantera or Wall Street guys, Pantera Capital CEO says China will buy 1 million Bitcoin, adding, "That's why I'm so bullish." So I don't know all the full details of that. I need to watch that snort video, but that's another big wig with a lot of insider information, a lot of power, a lot of money, saying China is about to join the arms races with the United States and actually quadruple the current holdings that the U.S. government currently has.
Yeah, I think that kind of, I don't know, my outlook on it is, as beaten up as alts already are, yes, they can go down further, but I don't know anybody that's going to sell their alts now. If they go down further, they're still not going to sell them. You're not going to sell your Bitcoin forever anyways. So it's like, hodl and do what you can to, get some more dry powder. So if we do, go into a bear market, you can, continue to DCA. Most people I know that are still here that haven't capitulated. The normies really never came in this cycle yet. So like, if you're here, you should be a long-term crypto holder anyways. Like, it's going to suck if we have to wait another 18 months through a bear market, but you believe in the assets long-term. You're not going to be selling your Bitcoin, but you're going to be buying more when it dips. You're going to be buying more Ethereum. Alts are already pretty much at zero as is. So it's like, I just try to look at it through a little, I guess maybe a little rose-colored lenses. It's like, all right, what's the worst case that could happen? It's not that bad.
It's moon or dust, baby. With my alt holdings, I don't have a ton of alts left. I had to sell a lot of them to pay a massive tax bill. Thanks, Uncle Sam. But I still hold the likes of Kai. By the way, shout out to Frank. Tuning into the show right now. Huge Kai fan over here. Shout out to Todd. Remember to like, share, subscribe. Absolutely, ladies and gents. Meek Chapo in the house. Jay in the house. Martin in the house. Anyway, so I had to sell a lot of my alts, but I still hold enough. But it's moon or dust. It's moon or dust for those. And what I'm seeing is, there's not a lot of sellers left. Price is kind of like bottomed out here on the Ethereum dip because the liquidity was tied to Ethereum, like in terms of Kai or Mello or Surf, for example. The liquidity pairings are dragging it down. But otherwise, there aren't a ton of sellers because, there's only diamond-handed left at this point in the cycle. So anyway, it's moon or dust for me in the alts, but I do want to circle back to what Hitman said about China potentially joining the Bitcoin arms race. Yeah, it's been my contention that we need just one, to call it major country, right? Could be a country from the EU, probably not because they're too woke and, anti-crypto to do this. US, obviously, China, maybe like a Brazil, like some big South America. You need like a big country, not El Salvador, not Kazakhstan, like a bigger country to really jump in, get their feet wet first and say, hey, we're accumulating Bitcoin. I think as soon as you get one major country to do that, it's going to cause that nation state FOMO where the other countries are like, shit, we can't get left behind. There's only 21 million of this Bitcoin stuff. 5 million of the coins already been lost. Not a lot can left to get mined. We need to get our hands on this before this country buys up way too much of the supply, and the thing skyrockets to $1 million, and they've cornered that market. So nation state FOMO, I think it's a real thing. We haven't necessarily seen it happen, in real time yet, but I think it is coming. And when that does happen, yeah, that's one way you get to $1 million Bitcoin, isn't it, guys?
Yeah, I completely agree. And we've slowly seen that. We've seen El Salvador, normally they do 1 Bitcoin per day every day. They did a big buy during the dip rather than just 1 Bitcoin, so they're still buying. The United States is trying to, get the strategic Bitcoin reserve passed through so they can figure out how to add more Bitcoin to that rather than just holding Bitcoin. And we talked about that, the rumor of using Bitcoin for taxes, you don't get capital gains, and in the United States, instead of selling that Bitcoin, would hold it and add it to the reserve. Those are the types of things when you have a scarce digital asset that has set inflationary rate with lost tokens and everything else, that the more and more of these individuals, companies, countries that do this buy and hold diamond hands, taking that supply off the market. When there is a supply shock, it's inevitable that price goes higher.
Well, our boy Plan B thinks price is going higher too. What do we got here, Nate?
Yeah, see, the stock to flow model hasn't been as spot on this cycle as it has in previous cycles, but from a zoomed out macro perspective, still on track. Plan B is taking a lot of flack this cycle here, but again, long term still spot on here. You say in 2019 at $100 billion market cap, $5,000 Bitcoin. Chart said MCAP grow to 1 trillion and 50K 2024. We got that, and then some. And then the halving period, which is at the blue arrow there, and then the same chart showing still on track for by 2028 a 10 trillion market cap and roughly 500K Bitcoin, which is where that red arrow comes in there. So yes, still on track. I think we front run and beat expectations to the 50K Bitcoin mark. Could quite possibly do the same before the 2028 deadline for 500K Bitcoin. Now, is that likely to happen next year in 2026? No, but Plan B is still very bullish on the 5-year outlook here. Well, not even 5-year, 3-year outlook.
Yeah, that's interesting, and I wonder how that accounts for the traditional halving cycles in the business cycle. Because if this is in fact a 5-year cycle rather than the 4, would that mean that instead of 2028 being 500K, maybe it's 2029 because you're going to see a top year in 2026 versus the normal halving period like you had there? But so it'd be interesting how what all this accounts for timing wise and business cycle wise. But I still think this is a nod in our favor because we still believe that we can go higher for longer here, and even if there is a bear market, 500K Bitcoin by 2028 means we can't go too deep for too long.
Yeah, I mean, I don't take too much stock in the charts and the dots and the lines and stuff. Look, Bitcoin long term is going to continue to get adoption. There's a limited supply of this stuff. Big money's buying it up. Nation states are coming. It's going to get to 500K. When that happens, I don't know, but I think this could come to fruition on the 2028 sort of timeline if we see sort of a replication of what happened with the gold ETF, where it's like a slow grind up for many years. So it doesn't really follow like the boom and bust cycles of the past, but it's more like a slow grind up, and we slowly get to, we slowly grind up to 500K. Otherwise, if you're thinking about boom and bust, and it's gonna continue to be extremely volatile, then you would assume that, all right, if 2026 is kind of a blow off top year, then you're gonna have like a down year or two, and then it doesn't have a lot of time to grind back up to 500K if it's like, bottomed out at, sub 100K during a bear market. So we'll see how it all plays out. Again, I don't pay too much attention to the dots and the lines, but I do hold Bitcoin because I know it's going to go higher as time goes by.
The privacy narrative has been the strongest thing, and it's slowing down a bit, but there's a new report that says EU reportedly plans to pass the controversial chat control legislation without discussion behind closed doors. Another knock against the privacy in the EU, where they'll actually be able to see all your chats that are occurring on all social media platforms. And don't forget that the EU is at crazy paces arresting people for comments they do on social media. Not just a death threat, because it's illegal even in America to say, I'm going to kill you. Now, would you get arrested for that on Facebook? Very unlikely. But in the EU, you can literally just disagree. Say, I am not going to use your pronouns. You are not they, them. You are a he. And you could get arrested for that. The policemen will show up at your door and arrest you for that. Pretty crazy. If there's some people in the EU, you can tell me if I'm lying or not. But this is big because now not only are they going to be able to see the public-facing messages you do, they're also going to be able to have access to your private DMs.
Well, there's also stories of things like guy posts, hey, I don't think that they should be able to hang other nations' flags on our street, and they arrested him for that. So there's all kinds of wild stuff. Basically, if anybody can consider what you posted offensive in some way or another, the bobbies are going to come knocking at your door.
Yeah, I don't understand how the police literally appease that to like arrest somebody for not wanting to say pronouns, but they do, and they not only show up at your door with one person to like talk to you, it's like 3 or 4 deep, and they are pulling you out of your house and arresting you. So I don't know how you as a cop would want to do that, but I guess if you're not a native-born cop anymore and you have those beliefs, that's what you're doing, because it's a lot of dykey girls with short haircuts and foreigners that are showing up to these doors and arresting UK citizens and EU citizens. Pretty crazy world in which we see, in which you are giving the most power of those who are not native-born, are not in your culture, and sometimes aren't even speaking your language. So this has to open your eyes, because remember, EU is where Western civilization started, and it is crumbling. So if you think it can't happen here in the United States when to our northern border Canada is following the same path as the EU, I think you are sadly mistaken.
It's terrifying. It's tragic. Hopefully it's not entirely 100% true in terms of that law getting passed. I do believe there are still individual rights in the EU. Maybe not as robust as what we have with, our Bill of Rights and our Constitution here in the U.S., but there are individual rights. And so the notion that the government could read every single text of yours without a subpoena, right? Because just to be clear, the government in the U.S. can also get to your private messages if they get a judge to sign off on a warrant to search for that stuff. And then they can actually find it.
And have to have probable cause and all that
shit like that.
Yeah.
They can still get to, but they need like probable cause to know that you're committing a crime.
We're also not arresting
surveilling
people
the entire
for that kind of stuff.
population of the United States and everything they say. So if the law is basically in line with that approach, okay, fine. Like, look, if you're doing criminal stuff, then they can probably, and they can find your communications and arrest you based on that. But it can't be thought crimes. Like, it can't be, I'm mad about the foreigners invading my country, or I don't like these flags, or I don't want to call this dude a he, she, whatever. It can't be this thought crime stuff. It can't be opinions. It's got to be true crimes. I mean, so this whole thing is nuts if it's really happening as such. And yeah, guys, I don't know if you live in there or what. Maybe you can weigh in on this discussion. But yeah, hopefully you guys can vote another way and continue to establish privacy rights and individual rights and make sure countries don't go to complete shit. Martin's in the EU. Police in the EU press legal immigrants more than their own nation. Yeah, I mean, look, I'm seeing that on my feed. I think we're all seeing that when we go onto social media. But, I mean, I take everything I see on social media with a bit of a grain of salt. I'm not saying it's not happening. But is it as prevalent? Is it as big of a problem as, if you look from an outside? I can't say that for sure. But, Martin's living there. I don't know which country. He's saying that's what's going on. And so, yeah, it is a problem. Maybe it's not as bad as social media is letting on, or maybe it's worse. I don't know. Maybe it's worse.
I think you're going to see how bad it is in this Christmas season. So I don't know everybody's beliefs here, whether you're Christian, you're Jewish, you're Muslim. I don't know. But you're going to see the extremism happen, and it always happens around Christmas. But I think now we're really at a turning point where we're seeing massive immigration and Muslim, populations growing in these Western civilizations, and you're going to see some crazy, heinous shit over the next 2 months. It's already starting. There's already been a shooting in Germany when they were gathering around a Christmas tree. So it's unfortunate. I don't know the solution. Your mainstream media isn't going to tell you about it. It happened last year where they were literally driving cars through all the Christmas festivals, and it didn't even make mainstream news because they said they don't know why they did that. Come on, guys. I mean, I don't know how you stop it, guys. All you got to do is you need to get other people in power, and you need to stipend it out. But again, I can sit here and say that all I want. Doesn't mean it's actually going to become a reality. Here in the United States, we voted in Trump. He's doing the best to do that. But in other places around the world, that just isn't happening. And in the EU specifically, it's a different different situation because the countries are so small and it's so easy to cross borders over there. I mean, their countries are the size of our states. So when you have different policies and then you get the immigration crisis and they can freely hop on a subway for $20 in a 30-minute ride and get to a completely different country, that's why it's hitting them even harder. So I don't have the solution. All I know is you just got to try to vote people in power, and you got to stand up, because the squeaky wheel gets the oil. If you're quiet and just let it happen, it's just going to keep happening, and that's part of the downfall of the past 10 years. I think the UK citizens, they've always been proper, they've always been high etiquette, and that proper high etiquette and silence is what has led them to where they are today.
Well, someone who has been an unwanted guest in the crypto ecosphere and continues to be an extraction from our ecosystem, Pump Fund, in the news here today. Pump Fund, over the last year, between their IPO equity presale and their IDO, their token presale, raised just shy of $2 billion with those two raises, and then continuing to just max extract and take that money out of crypto. Pump Fund cashing out another $436.5 million since October 15th. Obviously, this is a blockchain sleuth. None of this has been officially confirmed, but these guys are pretty good at what they do. There's a lot of tracking that's been going on here, and this is not the first time they've been, tracking this wallet. It kind of gives the totals and stuff there, but again, over $500 million from that wallet has flowed out of the markets through Kraken into Circle, which has been obviously cashed out at that point into actual fiat. So Pump Fund, you raised all that money. You've done nothing. You've integrated your platform 0%. You haven't announced any that we speculated maybe you were going to open a blockchain and be a Hyperliquid competitor. But it seems at this point it's still just extraction to the tune of now over $1 billion out of our ecosystems.
We've talked about this in the past. When they announced the raise, we did a short form video that went on my Twitter and Crypto Paradise, where I talked about if you are looking at Pump Fund and they extracted at the time like 450 million worth of SOL, that means they're dumping SOL on your head and then extracting it out of the markets, not buying a crypto asset. If you were dumb enough to then give them $1 billion in the raise, this is going to be a downfall and a hindrance on the market cycle. Well, look what has happened. They didn't raise $1 billion. They raised like 700 million, but they've extracted over $1 billion in value. What is SOL price if you go market buy $1.1 billion? What is some of these meme coins if they would support them with a buyback program based off fee generation? I mean, the trenches could be a lot more fruitful. Solana price could be higher, which drags all of the altcoins on that network higher. And they're going to continue to extract this. I mean, fool you once, shame on them. Fool you twice, shame on you. I don't understand. It was as clear as day. They had information that they already extracted 450 million at the time, and then they were going to raise $1 billion. I said, you're an idiot if you do this. And they raised 700 or 750 million dollars. And what do you know? All the money they've raised instantly extracted over the past few months.
Yeah, that's coming from their token raise. They also did an equity round for another $1 billion. So. Yeah, the money that they're extracting, because the equity raise would have been in fiat anyways. But this is all the money that they did that token launch. Well, you think that money is going to go into the ecosystem, product development, blah blah blah, and instantly extract
Holding
it out.
Solana, doing something. Nope.
Yeah.
Crazy.
Yeah. The sad part is we're all the losers in this. Everyone else is a loser in this Pump Fund story. Obviously, everyone's getting dumped on. They're extracting the Solana, they're selling in the market. Okay, so my Solana is probably less worth less than it otherwise would be. But I just feel this whole platform has been a cancer on crypto. If you look at the quote devs, they're not devs, they're just random degens launching coins on Pump Fund. They're also extractors. They're also just there to rug people. Then you look at the people buying the memes for the most part. I mean, let's say there are exceptions. Maybe there's 1% of legit memes that are trying to survive long-term and build proper community and proper brands. But 99% is not that. So everyone involved in that ecosystem is basically an extractor, basically just looking to dump on somebody else's head. Is this really what we all got into crypto and blockchain for? Is this why everyone got excited, back when they first learned about crypto? This is how you envisioned the space evolving? Like, come on, guys. We need to do better as an industry. If the end users disappeared from this product, the founders couldn't extract anymore. there wouldn't be any more money to be made. So I think everyone needs to look at themselves in the mirror. If you're still on pump fund, look, I get height of the meme coin bull run, fine. That was a craze. That was a moment in time. Whatever. Let's set that aside. But if you're still on there trying to make new coins and dump it on people, and then you're buying into these coins, like, what are you guys doing? What are you doing with your time? So I think everyone needs to look themselves in the mirror. It's a sad story. I'm hoping we look back in a couple of years and go, wow, that was a gross little footnote in the history of the evolution of crypto.
Yeah, it was
I wish we
clear
could
as
say
day.
the same. Go ahead.
No, I was just gonna say it was clear as day. We had short form content on it. Again, we can say stuff, but we can't stop everybody from participating. And overall, their participation is just hurting not only Solana as a network, but the overall crypto market. Because again, it's going from Solana and meme coins straight to fiat and straight into back into traditional markets. They don't even have the dignity to hold it in Sol or Bitcoin or ETH. Or it's just gone, and it's going straight to their pockets. And the fact that they extracted 1.1 billion of crypto while also raising 1 billion from TradeFi, while doing meaningless updates to the platform, it's like, what do you need 2.1 billion dollars for? I don't understand.
It's a joke. It's an absolute joke. I hope they are relegated to the dustbin of history here in the next couple of years. You know, to me, like, for pump fund and work, you need retail who is excited about memes, and maybe there's a whole ecosystem and like subculture within crypto that's still into memes. I guess there is on pump fund, but for the majority of us, I think it was that moment in time last summer when it was super popular. Like, guys, let's move on to the next trend. Like, pump fund memes are done. Let's move on, folks. What do we got here, Nate? Are banks
another trend that
or what?
Yeah, another trend that would be great if we could see end is the fiat banking system. Once again, the U.S. banks are now sitting on $400 billion in unrealized losses as of Q2 2025. This has been something that's been in and out of the news all year. We saw it was early this year. It was a couple banks in the U.S., Silver something, I don't even remember. But we've seen what happens when the banks collapse. It can cause all sorts of issues in the overall economic ecosystem for obvious reasons. If banks are insolvent, people get a little worried. This is largely due just to the overall how the system is set up. Banks, it's almost as if they don't have sound fiduciary policies. Yeah.
Well, this is what happens too when like rates are as high as they've been for this long, and people are just underwater on their loans and their debt. Like I think that's the story here more than maybe anything else. People are not able to pay back their car loans. They're not able to pay back their student loans. They're not able to pay back their mortgage. You know, this is ultimately what happens at the end of a tightening cycle where consumers under pressure and the banks are therefore also under pressure because they're not getting paid back on their loans. So what needs to happen, guys? Well, the Fed needs to step in and fix this mess they created and cut the rates and start quantitative easing. That's the solution for all this stuff. Print the money, solve the problem. Pump the markets. Let's go.
That'll help kick the can down the road a little further, but it's a fundamental underlying system that is at fault. You know, when banks don't have any sort of lend reserve ratios, which I believe they got rid of during COVID and never replaced. To which, by the way, before COVID, the reserve ratios were ridiculous to begin with. But yeah, essentially, banks can print their own money. When they can hold $100 of assets and loan out $10,000 against that $100, it's essentially their own de facto money printing, and that's where you get in situations like this. Yeah,
it's all just fake bullshit.
All these loans.
This is how the system works. It runs on debt. So that's our economy. Once we got off the gold standard, we turned to a debt-based economy, and this is the result of that. And there's no way out of it, and the only way out of it is really to print more to cover up their old debts with new money being printed. And so that's what's coming next, guys. That's the next phase of this, is the money printer go burr.
And that's the kicking the can down the road, and how far can we kick it is the question. That's an interesting thing, talking to a lot of funds and stuff, and then the TradFi markets nowadays. What we're seeing with a lot of, for example, out here, there's a lot of these massive real estate companies. and you keep having to do bigger and bigger and bigger projects. Well, most countries around the world, populations are declining, right? There's less people to buy homes. There's less people to rent properties. In the city, they build these giant apartment complexes. So all of these companies that on paper are worth billions and billions and billions of dollars have very little cash flow. So the only way that they can get money is to loan against their assets by the bank. Well, they're so far over loaned and leveraged, the only way they can get the banks to give them more money or to get more money to pay the loans on the existing properties is to go launch these new huge and bigger projects. To get cash up front from new investors to pay off the existing loans, and again continue this cycle of ever never ending kicking the can down the road. Well, it's not, there's some in the case of the real estate guys, the solution is have more babies, and that'll in a generation that'll kind of solve some of that problem. But the reality is like that's the whether it's looking at banks giving out loans to individuals or banks loaning money to these giant real estate companies that have no cash flow or very, very little cash flow. Times are changing. This system cannot continue forever as it has for the last 100 or so years. It's just not sustainable. And that's kind of the underlying ethos of why we have Bitcoin to begin with. So its problems are only going to get worse.
Thank God we have Bitcoin, guys. Thank God we have Bitcoin. Yeah, the real estate Ponzi scheme, that's a real thing. The banking Ponzi schemes, yeah, that's, this is how the system works. You're not going to change the system, though. That's the thing, right? Like, that's what I tell my friends, because a lot of my friends are like, they don't necessarily invest in Bitcoin, but they like to rail against the system, and can you believe this, that, the other thing? I'm like, guys, you're not going to change the system. All you can do is invest in hard assets. That's the only way to save your butt. It's the only way to beat this game here. So grab yourself a Bitcoin, grab yourself Ethereum, get yourself some real estate if you can. I know that's a harder thing to do, but you ain't changing the system. You just got to buy hard assets.
Well, and the system is even leveraging crypto and blockchain to help keep this game going and the spool of yarn from unwinding. So we've been talking a bit about the Genius Act and what's going on with all these stable coins and why is the U.S. government all of a sudden so bullish after being so bearish on it for so long. And we kind of hinted at this in the past, but it's a really great article. I've actually been following this guy quite a bit recently. He does really good deep dives and then kind of gives you a short synopsis on why things economically or what's kind of behind the scenes happening. So with the Genius Act, what this, there's a line or two in there. What this requires is for all new stablecoins being printed, if they're a US dollar denominated stablecoin, they have to back it 100% with US Treasury bonds. Not US dollars, not gold, not Bitcoin, not anything else, US Treasury bonds. So what that does is it solves the problem of who's going to buy US debt in the future, because that's been getting harder and harder. He has some really great numbers on here on what kind of effect that would have on the U.S. dollar on the U.S. Debt going forward. So stablecoin market when the law passed in July is 200 billion. Stablecoin market cap today 309 billion. That's 109 billion in new legally mandated purchase of U.S. government debt in just 4 months. Treasury Secretary Bessette's official projection for 5 years from now is $3 trillion in stablecoins. What that works out to is essentially $114 billion per year. Off of what it will lower the government's interest that they have to pay, which equates to about $900 per U.S. household per year, and that's in 2030 with only $3 trillion. As the stablecoin markets continue to grow, which everyone believes they will, that number is going to only continue to go up. So this is a massive, massive win for the U.S. government. And our debt there, and again, enabling them to kick that can further down the road. The stablecoin laws here just gave the U.S. government a bailout for at least a decade.
Good work, Secretary Treasury Benson. Yeah, I do. On its face, it's probably a good thing. It solves the U.S. government debt problem. It further ingratiates crypto into the traditional financial markets as they're going to start to adopt stable coins. You see, in this post, he's talking about JP Morgan's now allowing people to get loans based on their Bitcoin. That doesn't happen just out of the blue, yada, yada, yada. What concerns me about it, though, is does this now mean that stable coins aren't backed by anything other than U.S. Treasuries? Because wasn't there supposed to be it wasn't supposed to be like a mix of liquid assets like Treasuries, gold, Bitcoin, dollars? It was supposed to be a mix. So you theoretically could redeem your stable coins for like actual value. Does this now change it to where it's only treasuries backing stable coins? And then I wonder, what is the long-term effect of that if treasuries end up being look like a terrible investment? No one ever wants to buy them down the road. It concerns me a little bit. I'm still trying to understand the full implications of what this means. But in the near term, look, and if you're someone who lives in like Argentina, Turkey, where there's like massive inflation, you want access to stablecoins. So I think it does solve a lot of people's problem around the world. But there may be some unattended consequences this down the line. We'll have to see.
Oh, 100%. This is putting a Band-Aid on a hemorrhaging artery. This isn't solving our debt problem. This is just giving the U.S. government an escape door for another 5, maybe 10 years. This definitely is not an ultimate solution to anything. This is a get out of jail free card for the government to continue to run up the national debt and still have demand for treasury bonds.
Good for crypto, though, in the short term, right? Because it basically means the U.S. government has to adopt and sort of accept and approve of this industry in a way that's never been done before. So in the near term, I think this is positive for crypto. Long term, we'll see what this means, that stables are now backed exclusively by U.S. treasuries. I do worry about that a bit. Anywho, what else do we got? What else we got story-wise?
I think we've covered most of everything I've got up here for today. Take a quick look through.
Did you guys see Trump's executive order yesterday? First of all, every time there's like an executive order that's going to be signed, for some reason everyone on crypto Twitter is like, it's going to be this Bitcoin strategic reserve. It's going to be crypto related. And it's like, he does stuff other than just crypto, right, guys? Like,
you got to get your clicks, man.
I'm sure
if our feed is in any other sector, they're doing the same thing over there. We just don't see it.
Yeah. The Pokemon Strategic Reserve is coming.
I hope so.
That's what the TikTok people are saying. Any event, what actually happened is he made an announcement around AI. And basically the U.S. government's entering the AI arms race and going to be creating their own like AI. Or they're putting their own money behind it that's going to supplement and be connected to the private AI. It's going to be like complementary to that. It's going to be a part of that, but it's its own government AI. I'm loving this. As an AI investor and a believer in AI, I know there's a lot of AI skeptics out there. It's all a bubble. It's all, no one's going to use it. All these stupid takes. Here comes the U.S. government. All the money, all the power. Now coming in and getting directly involved in the AI industry. I think this is going to be a boon for NVIDIA. Anyone who's creating, the infrastructure and the GPUs, et cetera, that's powering AI. Where do you think the U.S. is going to get their, the AI GPUs from? They're not building themselves. They're going to go to NVIDIA. So, good luck, Michael Burry. Good luck, bro.
Well, they are going to be building them themselves because NVIDIA is investing trillions of dollars to be able to maintain and manufacture them here in the United States. So it is NVIDIA, but it is here on the United States soil. So that's why this makes sense that they're starting to do this, because we will have more control and insights to the development of the core chips and minerals in which are used to create these things. With NVIDIA coming over here, AMD, Apple, and all these making these plants and infrastructure here on U.S. soil, as that was a big byproduct of the tariffs. That's another thing people forget. All these trillions of dollars you hear about investment in America, that is a byproduct of the negotiations from tariffs and or these companies trying to avoid tariffs by coming here and doing it onshore.
Yeah, man. All positive in my view. I do believe this means money is going to be funneled into the pockets of the likes of NVIDIA and the other hyperscalers, Google, etc. It's all connected. And so, because I don't think the U.S. government is going to be they're not going to create a brand new company that's going to compete with NVIDIA. They're just going to basically go to NVIDIA and say, hey, build this data center for our own AI, right? As I understand it. I'm not necessarily an expert on this stuff, but it would logic would lead you to understand that the U.S. is not going to become a competitor to NVIDIA. They're going to be using NVIDIA technology to build their own AI and their own AI infrastructure. So I think this is, if you're an investor in AI, this is nothing but positive. If you're bullish on the future of the U.S., nothing but positive. If you think what Trump's doing makes sense, nothing but positive. So happy to see this. Happy to see it. Even though it wasn't the U.S. Strategic Reserve, Bitcoin Strategic Reserve announcement at 4 p.m. That's going to happen one day, though, guys. One of the days, crypto Twitter is going to be right.
By the end of the year. It's supposed to be by the end of the year, right? So we'll see. I will say
we've already gotten, by the way, an executive order about it. We haven't gotten the legislation, right, from Congress about it. So, Trump's doing what he can, but now it's Congress's turn to step in, and I think that's, Clarity Act might be step one in that, and then you get this Bitcoin Strategic Reserve of us actually buying the Bitcoin that we haven't gotten yet. We know they're holding the Bitcoin. That's all good. Happy Thanksgiving to you too, Hexbull, and happy bear market. Do you guys still think, are we in a bear? I guess this is a question. Are we in a bear market? Are we in a bull market? Where the hell are we in this market right now? After the crash to 80 and the bounce, where do things stand?
2016 and 2017, there was like 4 to 6, 30% plus drawdowns in that bull market. So currently, that was a 32, 35% drop that we just saw. So that still falls within the normal confines of what happened in 2016, 2017, what happened in 2019, 2020 for normal bull market consolidation drops. So it wasn't 60%, 70, 80. It wasn't 1 month, 2 month, 3 months drawdown like a normal bear market. In 2016, 2017, when you went from $500 Bitcoin to $20,000 Bitcoin, what most people remember is one of the most euphoric and easiest bull markets ever because there was way less shiny objects. You had like 30% drawdowns, and that's what we just had.
Well, we've had 2 this bull run already. Early 2025, we had a 33% drawdown. Earlier back in March 2024, when we went from, where were we at? Yeah, there was another 33% drawdown from March when we were at 74 down to, it was like 48, 49. So like even this cycle, we've had pullbacks that were as big as this. This one I think is the largest, coming in at like 35%, but still right within the range of what we've had twice this cycle already, and seen many times in other bull cycles in the past. Could it be? Sure, but just because we've dropped 35%, 36%, whatever, does that mean it's a bear market? I don't think so. I think it's really the timing, because it aligns so well with when the 4-year cycle should be, dumping us into a bear market. That's what's got everybody so terrified. But again, I don't know. None of it lines up and makes sense to me.
Yeah, you made a joke about a Pokemon Strategic Reserve. Did you guys know there is an actual sports card Strategic Reserve? Many people don't know that, and it's not really a strategic reserve, but every year the Library of Congress spends quite a bit of taxpayer dollars to buy all the new complete sets and then stores them in the archives of American history, and they have one of the largest and most expensive sports cards collection in the entire world, much rather just the United States. So I just thought that was interesting, so I said tongue-in-cheek, I wish they would. I kind of do wish they would, because that means I would have to buy some Pokemon cards of the past, which would drive prices up. But many people don't realize that they actually have a sports card strategic reserve, not really, but for the archives and for history of America, and they buy every new set that is released every single year.
If you guys don't think the U.S. can start a Bitcoin strategic reserve, knowing that information, the U.S. is spending taxpayer dollars to buy new sets of sports cards, etc. You don't think they can turn on to a Bitcoin? All right, guys. All right. But yeah, no, as to the discussion about whether we're in a bear market or not, I mean, we're clearly in a bearish period of a market, of probably a bull market, of the bull. It is obviously the bull market, right? Let's just call it what it is. But we're in a bear. We're now 6 weeks into basically a downtrend. I know we've had a little bounce, and sentiment is like rock bottom, like sub 10, fear level right now. So we're in a bearish period. I think the more important question, of course, is, are we in a crypto winter now? Is this leading into a multi-year or year-long or 6-month or whatever, or just more down, alts doing nothing, just despair, until eventually we climb up out of that somehow? I don't think so. We obviously talk about this a lot, but it's going to come down to the Fed policy. Oh, hey, we're at 15. Look at that. Okay, we're bouncing. We're pumping.
15.
We're pumping. Feeling good, baby.
Yeah, I think
better
we
than
hit
9.
what,
Better than
7 or
9.
8, 9. Yeah.
Yeah. So look, yeah, the Fed's going to save our butts here. They're going to save the risk assets. They're going to save the banks. They need to save the banks too. They got to save everyone who's underwater on their student loan and their car loan and their mortgage payments way too high. People need to refinance. Fed's got to step in and save our butts, and they're going to do that. So yeah, I think we are not at the start of a crypto winter, even though the timing, if you're a 4-year cyclist, would suggest that we are. But yeah, critical moment here. Got a few more weeks, I think, until the 4-year cycle has been completely invalidated. Right? Because we'll know by what, mid-December, after, let's just say, because when would Bitcoin and alts should have peaked?
Well, according to some people, it should have peaked in September, and then other people said October, and then other people say, well, if you go by seasonality, it would be January is when alts would peak. So who knows? But if you go by actual days, it should have already peaked by now. So it depends on, your theory. All these 4-year cyclists keep moving the goalpost, right? So we'll see what happens. If you go to a new high above that 126,000, I think you can say the 4-year cycle's dead.
Right, exactly. So maybe a few more months, who knows? We'd love to see a continued slow grind up here, nothing crazy. Still a V-shaped recovery, but, gives people a little bit of time to buy in, buy the dip, get some of the tourists to sell out here, get the 4-year cyclists out of here, and then bam, let's go ripping and roaring sometime in early 2026. Would be great.
That's my theory, and I'm sticking to it.
There you go. Yeah, Frank, I think you're right, bud. 2025 was the barrier for alts. Now, I mean, we've been talking about Bitcoin in this discussion. Altcoins, I mean, I don't think you can say we're in a bull market, can you? I know Solana did well, BNB did well.
We had
little do well.
We had little outliers or little seasons where we were able to make money with some alpha and some inside info and helping projects, but everything was just so short-lived this cycle. It's like, we had an AI portfolio, a year and a half ago. We made money, but those AI projects ran for like a month. You had a BNB meme season for 3 days. Really, it was like Bitcoin, and then you had BNB outperforming Bitcoin with nobody talking about it but us. You had Solana had its little reign when Pump Fund first launched before they got around to extracting $1 billion. And, Pulse Chain had its 3 months in the sun as well, where it was outperforming Ethereum, and projects like PTGC and Surf outperformed in a massive way as well. But everything was short-lived. There wasn't an overall market sentiment shift in which retail came on board and everybody was winning and getting along and everything was cupcakes, unicorns, and rainbows like we've seen in previous cycles.
No new retail. No new money flowing into crypto. No new money coming into the economy, right? I mean, money being sucked out of the economy by the Fed. There's literally selling their assets. We need them to start buying assets. That's quantitative easing. So, look, it's been a difficult 2025. We weren't necessarily expecting this. I think going into 2025, even myself, I was thinking, 4-year cycle, still a thing. End of the 2025, we're going to blow off top. We're going to have an alt season. It's going to be a glorious thing. Never happened. And because we never got anywhere near that euphoria, 0 of the 30 bull market indicators hit. Because of that, how can you say that we're going to have a massive downturn? It just doesn't make any sense to me. So I'm now converted. Down with the 4-year cycle, in with the 5, in with the liquidity cycle, in with the business cycle. That's what drives the markets, not random dates and the Bitcoin halving. So that's my new belief. And let's see if we're right about it.
Yeah, and the ISM would say that we are, in fact, in a 5-year business cycle instead of a 4 that Frank is talking about there. So ISM still at 48, QT about to switch to QE, and instead of being on the 4-year debt and liquidity cycle like we've been in for a long time, we're actually on a 5-year due to what happened with COVID. So that is why you can potentially get the 5-year cycle here. It's not about the Bitcoin halving. It's always been about liquidity, and if this does play out this way, that proves it.
Yeah, we this time last year, shout out to Frank, by the way, appreciate you jumping in the conversation. You as well, Meek Chapo. Yeah, the glory days this time last year. Yeah, this was when Trump had won. And, market basically pumped. I think Bitcoin was like 70,000, then it ran to like 100 in like a month. And during that time frame, alts did great for a month. But then, yeah, same story. Okay, people rotated out. There wasn't
TerraFud.
Well, yeah, TerraFud hit in early 25 in like February, and that kind of killed the momentum. But even so, I mean, there wasn't any sustained uptrend on the alts. It was just quick kind of rotations. You'd have something pump for a couple days, and then people would rotate on the next thing. So it's just been tough for altcoins. Hopefully you guys are diversified and have some Bitcoin as well, have some majors, ETH, Solana, BNB. I mean, all did do well. But altcoins, low caps did nothing. And 2026, that's the paradise year. That's the paradise here. That's when we retire on the beach. So let's just stay locked in here. I know it's been extremely difficult. We're not going to have a fun Thanksgiving. It's not going to be bragging around the table about our gains. But, there's always next Thanksgiving. There's always next Thanksgiving, guys.
Hey, we still got a couple days. Where's the God candle? Give me the God candle.
Next year at Thanksgiving, you can look forward to either $300,000 Bitcoin or $30,000 Bitcoin. And I got to be honest, I'll take either. I mean, if I get an opportunity to buy Bitcoin at $30K, I'll take that every day of the week.
As long as we have a run up early in 2026, got to get some gains first to have some capital.
Yeah.
Oh.
Yeah, I think 300K Bitcoin by next Thanksgiving. I like that prediction. I do not like the sound of 30K. So let's make sure that doesn't happen. We'll post it along the way. We'll be preaching this asset class. We believe in it, ups or downs, all the bullshit you see. We're still bullish on it. It's a great place to be. We thank you guys for tuning in as always. We'll be back tomorrow with another live stream, and until then, we will see you on the beach.